What's up, folks? Let me turn down the sound a little bit. Let's see. A little bit, little bit. Okay. All right, so, wow. That's not turning down the sound any at all. Okay. Hello, hello, hello. Let me try let me see. Hello, hello, hello. Hmm. How about that? 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 No? Better. No, not better. Okay. All right. Well, looks like I have a little bit of an echo. Hopefully, it's not too bad on your side. Uh, Turn this down. Yeah, then you get nothing. Oh, order field. What happened? Did we cash out? Let's see. I'm working on some. Yeah. Working on the trade I did today. Order field. I don't think it filled them all. Let's see. I was looking at this bounce here, and I got in here. No, no, no. Where did I get in at? It's on my other screen. I've got two desktops open, but what in the world? Oh, gotta show the after hours. Still trying to figure out why I have this echo. I work on my sound and stuff. Okay, guys, so I have a new setup. All right, I turned that down. I have a new setup, and it's fantabulous. I'm telling you, I got my new computer, my Lenovo Tower, and it works great. All right, so yeah, so I was looking in after hours, looking at this area here as it was moving down. You can't see it on this window, but I have it on my other window when you're looking at the bid and the ask. We had a spike in the bids come in here. Didn't have a lot of difference in orders, but I saw a lot of sellers coming in here, so that meant that there was supply to buy. All right, so what I did was got in this area here, and then I looked to get out here, and I looked to get out there because it was about halfway up here, and also there were other spikes in here in regards to bid and ask sizes. But again, I can only see that when I'm running this strategy here, this indicator here that I created. So without that, my X-ray vision does not work. So being able to utilize that, I don't know what was the. Well, I'm still 800, so it didn't get me all out. Didn't get me all out, but and again, like I'm just on a simulator account, guys. I'm not trading with hundreds of thousands of dollars, right? So I don't know what did it went up as far as 651. Like I said, that would have been great if it had got me all out, but it didn't. So we're just gonna keep pushing forward. So I'm gonna try to keep my videos a little bit shorter. I don't think that people are that interested in the actual algorithms that it takes to make things happen. So I'm just going to do something simple to where I just show you what the algorithm is that works on the day time frame. But the real work that I do, the real work that I do, the time that's really involved, the commitment is to find strategies that work not just on today, but that work throughout every day over multiple days. So until I get quick enough, or until I decided to post that kind of data, I'm just going to do a quick kind of recap on a strategy that works in the short time frame for the day. So today we're looking at August the 30th. Today is August 31st. We're looking at August 30th. Yesterday we're looking at the 1 minute time frame, and I want to see what kind of strategy I can put together that actually is profitable. And so what I was telling you about earlier, you see down here, you can't see that. Let's see. Let me move this out of the way. All right, you see this down here? That's bids and asks coming in. So that's creating your imbalance. That's creating your imbalances, for which one side is going to move and maybe leave the other. Okay, all right, so let's get the after hours out of the way, because as I'm doing my algorithmic calculations, I'm not looking at after hours. After hours is the Wild Wild West. We all know that. All right, so on the regular hours, if you look, you can see the actual results of the where is it at? Let's see, strategy performance report. Trying to show you the results of the actual study that I put together this morning, and it took me like 20, maybe 15-20 minutes or so. So it wasn't an arduous process. Let's see, strategy performance report. Okay, all right, so that is it. That's the equity curve, which by my standards it looks pretty good. Going straight up. Let's see, and then here's the periodical return. Let's see, the regular session has started. Oh, it didn't even bing on me. Okay. All right, is it going to get me out? Are you guys buying? Is it going to get me? Excuse me for 1 second, folks, as I look at my simulation account. I want to see. Got lots of noises here. Okay, there we go. Session hours. There we go. All right. Am I still in it? I shouldn't be. Okay, now I'm not in it anymore. No, I'm still in it. I still have how many shares? 250. It should have took me out. I shouldn't. Oh, it didn't, because I didn't put that order in. So I'm just gonna close this. All right, very good. So on that, taking that trade. Where is it? Workspace and status bar. All right, so would a close out with 794 for the day. That was a good. That was a good target, good entry. All right, but that's not what I come to do today. And we just want the regular session. So again, guys, we're looking at. If you look back at your top left corner, we're actually looking at, oh, let me move that. Okay, there you go. There's a 794. There's a 794. I got so much stuff on the screen. So we're looking here at the profit made, and now this would have been the profit on a $50,000 account, taking $35,000 transactions positions at a time, and then, like I said, on that size account would have made $1,300, 2.7% gain with a 6.82% profit factor and 76% profitable. That is great. That is awesome. All right, so pretty much what I'm doing as I'm looking at technical analysis and that kind of thing is on a day-to-day basis. As I put these together, I'm trying to find out what is the best. Let me turn this off. What is the best strategy to actually make profit on? Oh, this is what I traded yesterday. So I was profitable on it yesterday as well. But let me get that out of here, because that's not why you come here either. You came for the algorithm. Okay. All right. So I'm trying to figure out. So we had a nice green day, that's fine. But we're trying to figure out, even on a green day, on a bad day, whatever, we're trying to figure out what is the best strategy to implement to be profitable. And I know we have technical analysis you want to get in at significant swing points and that kind of thing. That you're using, you're looking back further in different time periods to see what the significant levels are, or if there was volume, or if there was volatility. So that's how you're coming up with your swing levels. But just purely looking at the candles And some of that you can discern some volatility based on the length of the wick, or the time frame. You can discern some of that just looking at the candles, but you can't pull out every piece of information all at one time. And the coders who can do that, who are really good, kudos to them. I am not that good yet. All right, so what I'm going to do is just show you what I was looking for. All right, so we're going to get the performance report out of here. All right, so what I was looking for were these specific areas here. All right, so these, boom, that area, boom, those pullbacks, right? And so the long and short of what I'm looking at is, you just want to know the results, because you don't want to create any computer code. Well, if you want the code, here it is. It's right over here, right? And again, I'm not a financial advisor. You can use this stuff if you want to at your own risk. Hadn't made me a millionaire, so if it makes you a millionaire, great. But this is all informational. This is all just for fun, entertainment. Okay, so as we're identifying these couple areas here, we can look and we can obviously see that it's under this black line, which is a non-moving average. It's some of these are bears, some of these are bulls, but as we're coming down, most of these are bears. You do get a bull in here, bullish candle. But the final code that I put together is this over here. Let's see, let's make it bigger. Okay, all right, so and especially like if you're doing your own technical analysis and you're just trading the chart, just punching buttons as it goes through, this is what you want to know. This is your takeaway from what I came up with doing this algorithm. All right, so the first thing is that the open is less than the non-moving average. Okay, so you see that the open of the candle is below this black line. The second one is that the low is lower than the low before it, which just means that the low of your target candle is at least lower than the candle before it. So it means that it's going in a downtrend. And you want to buy, there's plenty of people who trade breakouts. I have not been good at that. But you want to, for dips or reversals, you want to buy that bearish candle. Of course, you want to look for confirmation and that kind of thing, but you want to buy that bearish candle. So the low is lower than the low before it. All right, the third one is that the bottom wick is at least, or is greater than 10% of the 10% of the range. Yes. So we're just saying that the bottom wick is at least 10% of the overall range of the candle. So it means it's not a shaven candle. If it starts going down and then that candle ends, it's a hard edge, and then it goes down and then that candle ends, it's a hard edge. There's no wicks. We do want to see a wick. That lets us know that there is some rejection going on. Like if you see this one here, you see a little bit. Gosh, man, this thing is. Let's see. If you look here, you see this wick. If you look here, you see a little bit of a wick. If you look here, there's a wick on that one. There's going to be a wick on that one. This candle here, like, barely has. Let's go this way. All right, this candle here doesn't have a lot of a wick. This candle has no wick. Really. This bullish candle here has no wick. This candle has no wick. You see here how we actually have more of a wick? All right, so we're looking for that. So that's the third piece of the criteria. The fourth piece of the criteria is that the range of 1 bar ago is less than the range of over 7 bars. So the average range of 7 bars. So, some candles are long, some candles are short, some candles are super long, some candles are super short. We're taking the average range over 7 candles, and we're saying that the range of the candle 1 bar ago is less than that average. And what I'm getting at here is, if you see this candle here, it's really long. We don't really want to get in at that super long candle, because typically, even if you have super long candles like that, it can reverse from right there, and that's fine. But typically what you're going to get is you're going to get this slowdown. You're going to get kind of a sideways, a little bit of consolidation. And typically in that consolidation, you're going to get shorter candles. So we don't want to take that first candle after a super long candle, because it may not be done yet, right? So that's all we're saying there, is that you don't want to take a candle preceded by a super long candle. Yeah, there you go. All right, and then the next one is that the 15 period moving average is over the 25 period moving average. So this yellow line is my 15 period moving average. This green line is my 25 period moving average. As this yellow line crosses under the green, now we're starting to get into more of a bearish trend. So a lot of people trade moving averages. I don't specifically just only trade moving averages, but I do like to see what the relationship is, and that's when you get into like your MACD, your moving average convergence divergence. So this is, maybe a piece of that. So we do want to see that the 15 period moving average is over the 25. That just means in the shorter, I guess we're kind of specifically trading the shortest time frame, not the shortest, but we're trading a shorter time frame because we're really looking at the non-moving average. But to make sure that we're still in an uptrend on the larger time frame bias, the non-moving average is a shorter time frame. The 15 moving average is a medium time frame. 25 period moving average is a longer time frame. 200 period moving average is a longer time frame. Right? So if we're really kind of concentrated on trading the 9 period moving average, which are quick little boop, boop, boops, then we want to make sure that at least on the 15 period moving average, it's still going up. So the 15 period moving average should be above the 25 period moving average, if that helps you. All right. The sixth condition is that the volume, the 6 period average of the volume is less than the 50 period moving average of the volume. This is just saying that volume is slowing down. You got the larger 50 period moving average, and you got the smaller 6 period moving average. So what's happening on the smaller time frame is rest. It's lower than what's happening on the larger time frame. And when you get into a pullbacks, now reversals, like real reversals, are going to have like more volume. But then it's just at that one spot you're going to have more volume because you have all the bids and asks and all the volume coming in, and it's getting all tangled up. But like for continuation, for just dips and that kind of thing, you're going to see a bit of a rest. You're going to see more consolidation, shorter bars. You're going to see that there's a pullback, so that the low gets a little bit lower, and you're going to see less volume. So the 6 period volume is less than the 50 period volume. And you can see that on my screen by the yellow line is the 6 period volume. The blue line is the 50 period volume. So when the 6 is less than the 50, that's an indication that it's time to go. All right. And then the 7th condition is something I like to call wackety doodle. Now, wackety doodle, no, seriously. All right, so the 7th condition is we're just looking at the recent occurrence. Check this out. Let's zoom out. You see here how on some of these you get like a real high amount of volume right here. What's happening? It's moving up. That's a great time to get in. Really, that's a breakout. All right, so that's a breakout here. And that's why I don't like trading breakouts, because if you trade a breakout, then really your next place of support could be down here, or depending on which time frame you're really supported by could be way down here. You've got all this gap to try to make this little bit. Or you may be targeted for this little bit, I don't know. Or you could target the break, you could identify the breakout by the volume, and then you could look for the retracement to touch this area, and still maintain this breakout area. This breakout volume and this breakout area, it maintained it here. You could get in there and then look to move up. As far as I'm concerned, there's not enough going on with breakouts for me to be like, oh yeah, I want to wait around all day for breakouts. And then you only have like a couple. So, but if you're good at breakouts, put something in the comments. Let me know some of these specific technicals involved in breakouts that you see that are fairly consistent, and I'll try to put together an algorithm that can identify breakouts. I just don't know enough about them to trade them or to make an algorithm for them. So, moving on to what condition 7 is saying. Condition 7 is saying is that if we have that really high volume there, it could be breakout volume, it could be exhaustion volume, right? So like here, you see that volume is really high. As you start to get in here, you're starting to get into exhaustion. The buyers are moving up, but they're meeting sellers. And so, whereas the buyers were just kind of doing their thing, now they're meeting sellers, and the sellers are like, yeah, well, I want to do something too, and now it's a whole lot of volume going on. So, if that occurs within 8 bars, then you don't want to take that trade. Just out of curiosity, let's take condition 7 off. So we're going to go down to condition 7. I'm going to do a double slash, re-verify. And so when I re-verify it, gosh man, this computer is quick. Alright. When I re-verify it, let's see, this is the way it looks now. Take it off. Okay, and now re-verify. Okay. So it actually didn't change it a lot. Now if we take off, oh, wait a minute. That was on my strategy. Let's go over to the actual show me, and I'll show you what it's doing. Alright, so here, if on condition 7 we take condition 7 away, we're just going to slash it out, then this is what it'll look like. Boom. Okay, so it doesn't look like we got a lot of differences going on in here. Let's add it back in. Alright, but let's first look at the chart. We've got that one, got like 2 or 3 in there, 1, 2 there. Alright, now we're going to verify it. And yeah, it didn't change it a lot. So, I mean, that might be something that is extraneous. However, that is still something that I consider to be significant. Like I said, you don't really want to be getting in when volume is getting crazy and it's starting to peak. However, I think I already accounted for that by condition 6, looking at the volume right here. Okay, so you see this volume up here and this general area at the top. We come down, we see this volume down here. This short-term volume, or this V6, is higher than the blue line, the 50 period volume. And so again, there you probably want to start staying out around that point until you get some other chart change. Okay, so, but anyway, we have condition 7 in there, and that is my final condition. So I'll put together a quicker little video for those who can't sit around and wait for 25 minutes to find out all this gold. Alright, but the strategy performance report, let's go over it one more time. Bada bing, bada boom. Guess who stepped in the room? Alright, so we're going to go back. We're going to turn strategy back on. And the strategy that I put together, and it changed a little bit since the beginning of the video. And to do that, as time moves on, it shifts the time frame. So, however, still profitable strategy. In the course of that, that one from the 29th through the 31st. Let's see. And I really didn't want it taking trades on this day. It only took a couple of trades through here. I wish that was off. Because if it wasn't off, then how about take these trades also? Because on this day, it still worked. Boom, 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 boom. So it still worked on, let's see, that was the 30th. It still worked on the 29th. It worked very well. But overall, if you look here, you see that it's showing 69% profitability over, a day and a half or so. 2.4% gain on the account, on, again, a $50,000 account, moving $35,000 trades at a time. Took 13 trades with a profit factor of 4.86. The performance graph looks like this. Went pretty much straight up, so I am happy with that. And here is the strategy performance report that laid out. Now, if you could capture these kind of movements on a day-to-day basis, you'd be doing all right. Okay, this is all I have for